So have you ever thought about what happens if your house gets destroyed? I mean, really destroyed, not just a leaky faucet or broken window or damaged roof, but more of a we need to completely start from scratch, destroyed. And let's say this happens to you. Lots of decisions to make, and it can be quite a stressful time for you, but let's say the smoke is clearing and you start to have other thoughts. Let's say you never really liked your house. Maybe you've been dreaming of moving. Maybe your new neighbors are the kind who mow their lawn at 6 a.m. on a Sunday. Your house is destroyed and you start to think, well, this is it. This is my chance to escape. But can you? The short answer is, well, yeah, of course you can. But what will you get if you do? Will you get the full amount listed on your policy, or is there some fine print that you should be aware of? Let's take a look. So insurance companies have all of these terms: replacement cost, actual cash value, agreed value, and occasionally cash out option. Let's start with the most common one, replacement cost. That's the amount it takes to rebuild your house from scratch. So, like a Lego set for adults, but way more expensive and without the fun colors. Most standard homeowners policies are listed that way, which is good. It ensures that if all is correct, you will be able to rebuild or repair your home as it was before the incident happened. Okay, wonderful. So if you have replacement costs and you want to cash out and run, can you do that? Well, you can, but the catch is this. If you do, and you have no other options on your policy, which we'll talk about shortly, then you will only get the actual cash value of the home at the time the claim happened. Actual cash value is the replacement cost minus depreciation. So that means if your home is showing some age, you may not get the full replacement value out of it. You may only get what the materials were worth from the day that they were built until now. So not ideal, but in some cases it makes sense. So how would you go about getting the full replacement value if you wanted to cash out? Is it possible? The answer is yes. And there are two possible ways to get there. First is you want to have your home listed on what's called agreed value. That is when you and your insurance company have a little heart to heart and agree on how much your house is worth. It's like a prenup for your property. You need to work this out with your agent or with your company, but if you have this on your policy, you may be able to get that full amount if you want to leave. You may pay a little more for the policy, but if that's important to you, then it may be worth the extra money. Similarly, there's something called a cash out option. Sounds kind of like a game show, doesn't it? But it's a lot more than that. Similarly to how agreed value works, it's often built into the policy itself. Mind you, these policies typically have a few more hoops to jump through as far as qualifiers, but these will allow you to cash out and move if you so choose to do that. Now, the question I often get related to this is, well, I have guaranteed replacement cost. Doesn't that mean I'm going to get replacement no matter what? Well, no, that's not what that actually means. Guaranteed is also a great endorsement to have, but that means that if we have market factors that push the costs over what you have listed on your policy to repair or rebuild, then your carrier will still pay what it takes to restore your property, but that may be a topic best served for another video. So in summary, if you're in this situation, it's a devastating time. You've lost your home. It's not just the walls and roof, it's memories. It's a part of you. So make sure you know what your policy covers. Talk to your agent. Don't let the fine print fine you. And if you have cash out or agreed value, congratulations. You can take the money and not rebuild at the same spot if you want. You can move away from those 6 a.m. lawn mowing neighbors. But if you don't have those options, you're rebuilding in the same spot, or at least likely cashing out for much less value than what you thought you were getting if you decide to leave, which is probably a nice way of saying get used to waking up to those early morning mowers on Sunday. Okay, that's it for me. Remember, in the game of life, make sure you read the rule book, or at least your insurance policy.